Paul, how is the new tax law impacting people who are collecting Social Security?
And to the first part of what you said, I smiled a bit because when I started in the industry, I guess I was a bit naive and I believed that a permanent tax law was truly permanent. I certainly learned that is not the case. President Trump had the desire to make Social Security retirement benefits income tax free. I think as he attempted to do that, he realized he could not. So as we are talking today, up to 85% of your annual Social Security retirement benefits can be subject to federal income tax, and it will still flow through that way on your income tax return. Now, if you're collecting Social Security, depending upon whether you're single or you're married and you file a joint return and your income levels, you may get an additional tax deduction. And we've modeled this and it is pretty beneficial. So if you're a married couple filing a joint return and your adjusted gross income is below $150,000, you receive an additional $12,000 tax deduction. And when we model that for people, it saves them about a little over $3,000 in federal income taxes. If that same couple's income is in between $150,000 and $250,000, it slowly gets phased out, where that deduction would be less than the $12,000, and over $250,000 it goes away. And if you're single, it starts at under $75,000. It's a full $6,000 deduction, and it gets phased out between $75,000 and $175,000. It is a temporary part of the law. It begins this year in 25 and currently goes through 2028. And yesterday, I actually stumbled across a bill that is floating around Congress. I think it's called You Earned It, You Keep It bill, okay? And they're trying to make Social Security benefits truly income tax free. And how they suggest they would project to pay for it would be to take the amount that we have Social Security withdrawn out of our pay up from the current level of 176 up to 250,000. So I don't think that's going to go anywhere. But one thing that I do believe that you paid in the Social Security from the day one that you started earning wages. If you're a W-2 employee, your employer matched 100% of those dollars. And if you're self-employed, you contributed both sides. And I would be for not having those benefits subject to tax, certainly.